Good morning and welcome to Purpose Driven Finances, where our focus is helping you use your finances to achieve the purpose and plan for your life. And now here's the host of Purpose Driven Finances, Alan Molina with Serwus Capital Management.
Hey, good morning. Alan Molina, your host, Purpose Driven Finances, President of Serwus Capital Management, helping you achieve the purpose and plan for your life through financial planning and portfolio management. Sitting here getting ready to mow the grass. That's 3 weeks in a row I've talked about my grass. Aren't you happy? I know you're like, Alan, we don't care. We have this same exact problem. Some of you guys have luscious lawns, like Rich. But I'm sitting here with my friend, my co-host, Rich Roth. How you doing?
I'm good.
Hey, that's great.
Yeah.
And looking forward to it. I like the warmer weather.
Warm's good.
It's a whole lot better than, the 10s, 15s, and the ice.
I mean, it is, but then you go to 90 and, even today, it's like there's still a lot of, I'll use the term you're familiar with, volatility in the temperature.
Mm-hmm.
I'd like to see a nice consistent, 70 to 80.
Exactly.
Give me one good month of 70 to 80, just perfect weather. It always feels like, we either skip spring and go straight to summer or, just craziness. I just want some nice, mild, moderate temperatures.
I expect you know the answer to this question better than I do.
Okay.
Is there any place in the United States that is moderate year-round?
What I've always heard was San Diego.
San Diego? Yeah, California. Mm-hmm.
San Diego.
Mm-hmm. I've never been there. The thing I like about California is you can't really swim in the ocean unless you have a wetsuit because it's so cold.
Is that right?
Yeah.
Oh, I didn't know that.
Because the water is coming, over here in Virginia, the Gulf Stream goes from the Gulf up.
Yeah.
There, it's backwards. It goes down from Alaska, and it's cold.
Interesting.
Yeah.
I've never been to California.
Neither have
I. And I just assumed that it would be, the beaches. You hear about the beaches in California and San Diego and, and just assume it's sort of like the East Coast where people are just swimming in the water, but not the case you're saying, huh?
From what I understand, there's probably some times of the year you don't have to have a wetsuit. And if you're a listener and you want to tell us, just, contact us. servuscm.com or my phone number, 434-316-0246. And so, Rich, what I thought we would do, besides talk about grass, and we're not talking about the kind of grass that I was raised on, the Maui Wowie.
Yeah.
No, it's Labrador, man. You know where that's from?
Fast Times?
Nope.
What?
No, a little older than that.
Cheech and Chong?
Yep.
Okay.
Yep. Up in Smoke.
Classic.
Exactly. It was.
It's a classic.
It was. That's what I was raised on. No, it's Maui Wowie, man. It's funny. Let's move on. Financial planning.
You're moving on from Cheech and Chong to financial planning.
Exactly.
That's a smooth transition.
Hey, exactly. Now the markets are Labrador.
What, Alan? What is going on? Obviously, one of the big stories is the war and the Straits of Hormuz.
Hormuz.
Are they going to be opened? Energy prices? Is it really going to be short term? People are at the pump. I know I was.
Mm-hmm.
I have a vehicle that takes premium gas, and I put $120 into it earlier this week.
Oh, I finally. Mine says premium too, or my wife's does.
$120.
That's crazy, man.
It was crazy. I couldn't believe it.
That's California prices.
I'm just pumping away, and it finishes, and I go to put the nozzle back on the deal, and I see $120, and I'm just like,
wow,
holy
crap!
Right,
exactly.
Right,
that
That's
is
what
high.
I said.
Exactly. Well, check this out. Here's what I'm going to make a prognostication.
Okay.
I think there's going to be boots on the ground.
Okay.
In the Strait of Hormuz.
That's not good.
Because I found out in my research this week that I believe it's the Emirates, and I didn't
UAE.
I didn't take geography of this area. It's just what I've looked at one map, and Iran took 3 islands in the middle of Strait of Hormuz, not quite in the middle, but it's in the shipping lane of Hormuz, and that's where they send their boats out of. That's where they launch a lot of missiles. One of the big islands is where they do a tremendous amount of loading of these big oil tankers. And Emirates was like, "Yeah, bro, you can have it." Several years back.
Have the island?
Yes. And so what happened is Emirates was like, "Yeah, we don't care," but Iran was like, "We're going to use this to our advantage." So it's going to be my expectation that we're going to have boots on the ground to deal with that. And hopefully we don't have boots on the ground anywhere, but that's what I think is going to happen.
Yeah, boots on the ground seems to me that it's not going to do wonders for the market and the economy.
Right. And the American people.
At least in the short term.
Right.
I mean, if it winds up opening things up
right.
and getting us back to normal quicker, then, the end game might be good, but the short term, boots on the ground,
is
probably,
not a good thing.
It doesn't.
No, it's not a good, and I don't want that to happen. It's just the Emirates should have dealt with the islands, because realistically, if we didn't deal with Iran right now, eventually, them being a rogue state would eventually do something like this. So that's the issue. And what do I expect? I expect oil will probably, it's vacillating right now between $90 and $100. And what I mean by that is there's actually, as I'm looking up the price, there's actually multiple kinds of oil. And what I should probably do is use, there's crude WTI, which I think is West Texas Intermediate, which I really shouldn't use because you can't really get WTI in Iran. It's really Brent oil. And Brent oil is really what I should look at. But looking at a 1 month chart, it hit a high of 120, and Friday it closed above 106. So it's going to be my expectation that it's probably going to go back towards 120, and the issue will be if it breaks about 120. Now, if I was President Trump, I would communicate with the oil producers in America and say, "Listen, guys, I need you to help out the American people. Can you go out and put a cap on what you're going to sell oil for? Because America is energy independent. What's happening in the Strait of Hormuz, from what I understand, we don't get any oil from it. So what's happening is, in America, I think the president could go, "Hey, guys, let's make a deal. You guys don't go above $90 or whatever the number is, and we'll hook you up with something." I don't know what that politically would be. But what would happen is that would cause American oil to go down, like WTI. Now, WTI is trading at 100. It's about at the upper echelon of where it has been, except for the big spike to 120, not 120. It was this big spike to 120. So that being said, what could happen is if the President Trump did that, it would take a lot of pressure off of America, and it would cause the rest of the world to, I think, sputter. Or maybe not sputter, that's not the correct term, but take a pause. Because there's some countries like India, they have, I think, weeks left. There's some countries in Asia that have days of reserve left. And Japan, somebody said 260 days. It's really about 90, 95 days left of oil. That's not a good place to be. And it's really, once again, America is being the policeman of the world, which this isn't a political show, but I don't agree with that.
Well, obviously that's affecting the economy and prices and inflation and what about inflation? What about interest rates? I mean, what are you seeing there for people who may be in the market to buy a home or refinance or grab a home equity line of credit or something along those lines?
Great questions, Rich. See, this is why I like you asking questions. It makes it to where it's more interactive. Inflation is going to jump 80 basis points from last to the next one that's going to be talked about and reported in April from March. That's significant. Now, remember we talked about rate of change. That's more important than the level.
Mm-hmm.
That's a rate of change shock. And the reason I bring up inflation is because then you'll have to look at, well, what does that really mean? What does that matter? That means for the the middle and the lower income, lower mid and lower income, it's going to be a greater strain on them. But beyond that, it's going to cause interest rates to spike. We are actually, in the QPM, we are long spiking of interest rates. And we're short high yield bonds.
Okay.
There's a reason for that. Excuse me. And the reason for that is because the CBOE has this thing to where they allow market participants to estimate of when they think the first rate hike or rate lowering is going to be. October, just in the past 2 days, has switched from no rate hike to a 57% chance of a rate hike in October. And then the next 2 or 3 months, I think it's December to March, a 62% chance of a rate hike then. So we've gone from we're going to have lowering of rates to now we're anticipating rate hikes coming down because of inflation. And so the problem with mortgages is they've gone up about 30 basis points in the past couple of weeks. They were at like 5.98. Now they're at, I believe, 6.3, 6.25.
Mm-hmm.
And what's going to happen is they're going to creep up. And it's the reason being is because of the oil. And so if President Trump had a deal with America, it could greatly insulate. Now, some people would say, well, free market, for all intensive purposes, we're at war for the world, because I do believe that Iran had some issues with the desiring the nuclear bomb. And we have 100,000 citizens in that region. We don't want them to die.
No.
So I'm expecting interest rates to go up. And even if the Fed doesn't raise rates, it's not going to be a happy scene.
Do we have time for one more quick one before the break or no?
Yeah, I don't even know where we are. Let me see. Oh, we're not even halfway through.
Okay. All right. One more quick one, and I know this is something that we talk about quite a bit, but man, it's every time I talk to somebody, every time I see something, the world, technology, AI is changing the world that we live in.
Mm-hmm.
And more people getting concerned that it's going to, take their job. Or how do you see AI in the near term impacting labor markets?
That's a great question. I'm in an entrepreneur group. Mike Cook, I think you've been invited to it, just haven't had time to attend. But Mike Cook, and we have an attorney in there. Everything's confidential or things like that in there. But
here you are spilling it.
Yeah, but I'm spilling it on air. I'm not going in the details. He uses AI. Construction guy, he uses AI. A software guy, he uses AI. A marketing guy, he uses AI. So AI is becoming entrenched in those people who are actually trying to build a business and grow their business. What's ended up happening is there is an overshoot. A lot of, and there was 2 other financial advisors besides me. It was exciting. Some people have said that software engineers, their future is not looking good. But I've seen some reports that some companies have cut tremendously on software engineers and software people, but the number of slots that are open now are more than they were. And so I think there is a right of the ship that's going to happen in AI software. What I mean by that is I've seen it to where Facebook will hire AI engineers for $500 million. not 1 year, but over their contract, which I think is crazy. I feel stupid even saying that. You know, how many times have we told our kids, hey, go to college, become a software engineer, and you can go out there and make $150,000 immediately? I think the ship is going to be corrected to where instead of starting out at 125, 150, they'll start out at 50 or 75. But what I'm hearing also from the entire industry is if you are a person who knows how to use AI, it makes your life more valuable. And it actually insulates your job.
I've heard there are going to be that the future is for people. It's either, you know, people who are in charge of AI, people who use AI, you know, supervise AI to do jobs, or the other type of people will be the people who are supervised by AI, like doing much lower level stuff, and basically AI is running them.
It is
rather than them running AI.
So a lot of middle management is going to be affected. Another area that's going to be affected tremendously are those people who know how to actually manage the AI and data centers. Not only being able to, because not all AI is going to be able to heal itself from a software perspective, but those people who can look at through analysis, hey, this board is dead, or this circuit is bad, or a mouse got in there and chewed this copper wire, AI can't do that. So the people that are going to take care of the facilities are going to, I expect, to be nicely paid. So, folks, we're going to go to a 30-second break. Give me a call, 434-316-0246, and I'll catch you on the flip side.
Hi, everyone. Brian Kilmeade here. Coming up on the next edition of the Brian Kilmeade Show, we'll have the biggest newsmakers, news breakers, and take a deep dive into news you care about. Whether it's breaking news, entertainment, politics, or sports, even pop culture, I'll bring you the latest developments with expert analysis from the big names you know and love. Plus, you never know who may stop by. That's all coming up on the next edition of the Brian Kilmeade Show.
Weekday mornings from 9 to noon on WLNI. And now, back to Purpose-Driven Finances. Here's Alan Molina with Serwus Capital Management.
Hey, good morning again. Alan Molina, your host, Purpose-Driven Finances, President of Serwus Capital Management. When you achieve the purpose and plan for your life, give me a call, 434-316-0246. Visit my website, servuscm.com. Now, Rich, we had a lot of pressing, ideas and what's going on with the market. Because realistically, what happens in your 401k, 403b, 457 is critical. And what ends up happening is in our life, we need to, manage those situations. But I didn't, I thought about, totally moving on from this show and just for the week. But I'm like, Serwus Capital Management, we have a process. And the portfolios, I sleep well at night. This segment is about the 401k at Framatome.
Okay.
Framatome's a great company. A lot of engineers, nuclear stuff. We have friends that spend a tremendous amount of time in France. I feel bad for the wife because she doesn't go there very often. She doesn't like it. But that being said, it's just one of those things, and it's a great company. And so what I wanted to do is talk about the Framatome 401k. They have a great 401k. From my understanding, they match 6%, which is really good in the area.
That's fantastic.
And
what's the most you've ever seen a company
6%
offer as a match?
Really, 6.
Yeah.
I
imagine with, and here at James River Media, we're a much smaller company. We just use a simple IRA, same concept,
right,
but much more confined as far as what our options are. But with some of these more complicated 401ks, you can do all kinds of different things. Like, were you talking about, was it Centra a couple weeks ago, who matched 6% or half of 6%? So it was really 3,
Right.
but you had to put in 6. So they
Right.
were encouraging you to save more, which, is a tactic. But, but there's a lot more flexibility in a 401k.
Correct. There
than
is.
Okay.
Yeah, there is a lot more flexibility than just a simple or a SEP.
So is there any limit to what a company can match in a 401k?
Yes, they are limited.
They are, okay.
And the reason I made the executive decision not going into the limits, the reason being is this will be a podcast and someone will listen to it next year and they'll say, Alan Lee doesn't know what he's talking about. These are the limits for 2000.
Right, it's outdated or whatever.
Right.
No, I mean, I was just asking generally because 6%, I mean, that's fantastic.
Mm-hmm.
You've not seen anything higher than
I have not.
Okay.
I have not. But realistically, when I talk to my clients who are at Framatome, most of them are doing 10, 12, 15, 20%.
Not the match, just what they're saving.
What they're saving. So what ends up happening is they get the match, which is 6%, and then, 10, 12, 15%, which the nice thing about Framatome is most of the employees there, even if they're not engineers, are process driven. And the thing I like about being process driven is it takes the emotion out of it. You're laughing, Rich.
I know plenty of engineers, lived with a couple in college, and not to disparage or cast a very wide net, but they're an interesting group.
They
Let's
are
just put it
interesting.
that way.
That's nice.
A neighbor that I had would use a spreadsheet, and this is years ago, a spreadsheet to plan his vacation. And I'm just sitting there going, wow, that's pretty detailed.
It is pretty detailed.
That's kind of how they roll.
Mm-hmm.
In your line of work, because I remember when I was doing it, the funds or whatever would have these big prospectuses, which just had all the inner workings of how the fund worked and, what the algorithms were. And, normally you'd hand that to a client and they'd just be like, in the trash,
Right.
Not engineers.
Right.
They're reading it.
Some of them do.
They're quizzing you on
Right.
it.
Some of them do.
Hey, it says on page 46.
Right. Now, all my engineer clients, they've never done that to me.
Okay.
What they have done is, Alan, what is your process of how to manage my money and do the financial planning? That's where I get the most of the engagement from engineers.
Okay.
And I like that.
I know you do.
Because we have a process for everything.
You've never seen a spreadsheet you didn't like.
Exactly. So that being said, at Framatome, it's a simple 401k. What I mean by that is it doesn't have a pension. And it's not like when you're at a nonprofit, there's some caveats at a nonprofit that the SAVE Act enabled. But one thing that's nice is if last year and you recently turned, the golden age to where you can add more into your retirement, which I believe is 50. That being said, the SAVE Act has dramatically changed that. So you need to either call me, email me, or just Google it, as to what is the maximum you can put into your retirement at your age. Also, the SAVE Act has given some other nicely benefits, and you just need to, I didn't go into them because the reason being is I'm trying to make it to where it's not so much in the weeds, but to say, hey, you've got a good plan.
All right, well, let's talk about this Framatome plan.
Yeah. And so one thing that you need to do at Framatome also is most employees at Framatome are higher earning. Because the reason why even the custodial staff, I don't know what they call them at these big, ginormous organizations, but I dare to say they have to have a level of clearance, because you don't want your janitor saying, hey, this is how we build reactors.
I think they roll with sanitation engineer.
That's perfect. That's perfect. And so what I would expect is at Framatome, if you were to take the average and compare it to Liberty University, Central Health, that the average employee at Framatome is much higher. That's my expectation.
In terms of salary.
In terms of salary, thank you. And so what I would really do is I would look at taking advantage of the Roth and the Roth 401k as a Framatome employee. The reason being is most families that I have seen nowadays the husband and wife both work. And if you're at Framatome making 120, 130, 150,000, and your wife is making a nice sum of money, you have to be concerned with the caps on your Roth. And in that situation, but even if you don't get near the cap on a Roth personally, it's probably much better to put your 401k contribution into a Roth, because it really helps you at retirement age. Because if you're an engineer and you started out at 25, 26, and you're making $100,000, $125,000, by the time you retire, you're probably making 180, 190, 200. What's going to end up happening is, and you've put away 10, 20% of your salary, you're going to have a nice chunk of change near retirement.
Mm.
And so if you have a retirement that's $3, $4, $5 million, and your RMD, required minimum distribution, at 72, 75 is, 124th, 125th, 120th, somewhere in that range, then that can be a big number. And if you're taking out of your Roth, that can be a huge help from a tax perspective down the road. And so you really need to look at that. The last point, and we may end up talking about something else. Oh yeah, I did list the Secure Act here at the bottom, but engineers have specific risk when it comes to what they do and how they do it.
Okay. I can't wait to hear this.
Exactly. Engineers tend to be over-optimize their contributions. Squeak it out what they're going to do and how they're going to do it. But they a lot of times under-optimize their allocation. What I mean by that is, like this year right now, S&P 500.
When you say over-optimize their contributions, are you saying they save too much?
No, I look at this as not how they save too much, but they try to target how much they save down to the decimal point.
Okay.
Not saving too much. But I would, if they ran a spreadsheet and it says, we will, if you're on a spreadsheet and it says, hey, I need to save 12.45% of your income at getting a 7% return, then what they do is they do 12.45 or 12 or 13%, and they really focus on that. But a lot of times engineers, they under-optimize their allocation because they know the law of averages. They know, diminishing returns. They know, my mind is blanking, but, the mean reversion. They know these things. And so what they do is they say, you can't beat the market, or you can't beat the market, or whatever. And so they go into a target date fund or a pie of 60-40, 70-30. And if you use AI, 60-40 is the most optimal portfolio, the golden portfolio, according to what Mary did a few weeks back.
Mm-hmm.
And the problem is, if you under-optimize your allocation, then the changes that need to be made, you're not going to make them. Because I have a chart that you engineers would love to see. It shows missing the worst 10 days and the best 10 days and the returns going back, I think, to 1930. But then going back to the meaning is paralysis by analysis. Is a lot of times engineers over-optimize how much they're going to put in, but they under-optimize their allocation. And that's key. Because right now, Rich, back in the day when you were a financial advisor, stocks down, bonds up, they're both getting killed.
Mm.
So, folks, give me a call, 434-316-0246, or my website, scrvuscm.com. I want to help you and Framatome employees maximize what you do. I look forward to hearing from you.
Returns for illustrative purpose. This is not a suggestion to buy, sell, or use a platform. Only will a suggestion occur after a meeting to determine goals, risk tolerance, and time horizons. Investments involve risks and no guarantee of future results.